What is going on, everybody? So today we are joined by one of my favorite new up-and-coming traders, absolutely killer, just monster price action trader, DocXBT. So welcome, Doc.
Hey, man, pleasure to be here. We talked about last time hanging out on your channel. I'm glad we finally got to do that. And thanks for the kind words, man. I appreciate that.
Yeah, absolutely. You've been on an absolute tear recently. I've seen that you've just destroyed this rally. You've been able to milk a lot of money from this rally. How are you feeling right now? Let's talk a little bit about psychology. First, actually, let me give you a very intriguing question to kickstart this. A lot of people are in the kind of 50-50 like mental tug of war, where when they start to do really well in the market, they're debating, do I keep the dice rolling and do I continue playing into my system that has gotten me so much money and try and see how much I can extend this? Or is it time for me to dial it back because eventually that big loss is coming? What's your take on that?
I think you just keep pressing the gas. I think you keep pressing the gas because this is what we live for in crypto markets, right? We're all here for the parabola. We're all here for the trend. And I think you're doing yourself a disservice if you're planning for the worst too early, because the nature of trends is that they last longer than people think, typically speaking. And even when you get to the top, there's signs of distribution. So you can keep changing, positions and chasing risk for a while. So yeah, I think riding the trend, riding the momentum is the right way to go. And if you end up giving some back at the top, that's fine. I can give you like a really good example of this year. Like we know the meme coins Pepe and Harry Potter, Sonic Obama 10 Inu. Luckily, I played both of those not like super early, but early enough to where I did multiples on them. And I did two different strategies. For Pepe, I said I'm going to take profits at dedicated locations. Okay, I'm up a 5x. I'm going to take profits. It hit this market cap. I'm going to take profits. I hit this. It flipped this. It's top 100. Like I took profits so often on the way up, and it ended up going way higher than I ever imagined. It went up 20x, but I only pulled out 7x returns out of that 20x because of my like aggressive profit taking. And then for Harry Potter, I said, okay, I don't want to do that. I just kind of want to ride this. And, people say, we'll sell the right shoulder, sell the lower high, sell after, whatever in your system, whether it's market structure or EMAs or VWAPs or whatever breaks, and try to sell the bounce after that. And so that's what I did for Harry Potter. And, lo and behold, I made more money on Harry Potter percentage wise, like from bottom to top. I captured more of it, just being able to say, okay, I'm going to do nothing. I'm going to allow the trend to ride. So like, that's the mentality that I would take both for trading and for investing. Like, don't kind of prepare for the worst too early, especially in the nature like with crypto, because these things just, like INJ, for example. Like if you pull up INJ, me and you would logically think, okay, resistance is at, if hopefully this just chart's marked out, but right, how many of us would think that, okay, we would probably face some struggle here. This is a natural place to take some profits. And what did INJ do? It went 30% higher in a single day. I'm sure a lot of people didn't, expect that. So that's just kind of what I'm thinking. That's kind of how I tackle that.
Yeah, man, I totally agree. So you pretty much have the exact same answer that I would give. I was actually talking to people because they asked me a similar question recently. And I was saying that, yeah, you definitely keep the dice rolling because, and especially this is true for someone like me, because I'm more of a passive trader, right? And I always say, I'm not the best trader in the world. Doc, I'm gonna give you a lot of props, man. You are 10 times the trader that I am. The difference here, I'm not kidding. I'm really not. You definitely are a better price action trader than I am, 100%. And there's no doubt in my mind. But my alpha, my edge is that I have patience. So I have the ability to sit here and wait for my system to show me an A+ setup and milk the absolute most from that kind of a setup. I've been able to do that every single time this year, except for on Bitcoin, except for the most recent rally. I still managed to do well because of altcoins, but the point that I'm trying to make here is a lot of the time I'm just kind of sitting on my hands doing nothing. So during all this downtrend, I'm not really taking too many trades. There are very few and far between altcoins that are heading to the top right corner and drastically outperforming the rest of the market during that kind of an environment. So I'm not really too active. That means that within the past 3 months, like 100% of my gains that I've been able to make have come from this span. Right? So that means that like all of this price action, 100% of my gains come from this. It makes up, in terms of time wise, it's like a few days have now accounted for my quarterly profit, right? So it's like if I sit here and take setups and I'm applying my system over and over and over again in a 50-50 environment where it's kind of hot, sometimes it works, sometimes it doesn't. Sometimes I manage to extract 3R, sometimes I take a loss, right? I'm buying like consolidations, doing range plays. Sometimes the range continues, sometimes it breaks down. If I'm doing that and then I'm applying my system 100% of the time, I'm taking losses. But then suddenly when my system starts to work to 80-90% efficiency without, wicking me out at the bottom, without giving me a head fake and like a stop out and just, saying, screw your entry, we're just going to go straight for your stop loss, 80-90% efficiency. And suddenly I'm like, oh, wait, now I want to stop applying this system now that it's actually working. But when it was barely working or somewhat working, I was applying it 100% of the time. Doesn't really make sense. So I need to be able to extract the most from the market. I want to touch on something that you discussed really quick. So also, I'm very much amazed by how you were able to say Harry Potter, Sonic, Obama, 10 Inu or whatever. You just like read that off like with no stutter or anything.
I've said it too many times this year, man. I've gotten over the meme. Yeah.
That was like, I was like dazed from that for a second there. Kind of stopped listening to what you were saying. So I was just like, what? How did he say that? But yeah, so another question I have for you is technical take profits versus emotional. So I get this question a lot, and I have an answer for it as well, but I'm curious to see what you say. So people sit here and argue, hey, Mercury, a lot of the time I'm sitting in unrealized profit and it's a big, bulky, unrealized profit. And I'm not used to sitting in this much profit. I'm not comfortable. I can't fall asleep at night, comfortably. And because my target, what makes sense per the chart, is 50% higher than where we're currently trading. But I'm already up 50% unrealized. So it's like, what do I do? And then, if you succumb to emotions, you trade it emotionally, there's oftentimes like you said, you sell too early and you end up like kind of cutting the position. And by the time that it does get to that technical take profit, it's not really nearly the amount of money that you could have made. What's your take on that? How do you balance being the technical take profiter and the emotional take profiter?
I would say the most honest answer here is you just need reps and experience. I don't think there's a clear cut like right or wrong for that, because everyone's in a different part of their journey, right? Like the guy that's in so much unrealized gains, that might be tremendous for him. And he might be struggling and he might be like, well, I finally did something right, and I need to realize these gains and I don't want to give them back. And you might have PTSD of round tripping that you need to get over. And I would say to that guy, you probably are somewhat still inexperienced in the grand scheme of things. You don't have enough reps. You haven't made that mistake enough times to be like, okay, I've journaled this is what I did in January. This is what I did in March. This was the June rally. And now we are in October, right? So someone like me who's been through all three of those things, I have 3 times where I could say, okay, as long as I'm better in March than I was in January, as long as I was better in June than March, etc., I'm building and I'm getting better. But if someone's coming to the market and they don't have a lot of experience, like how can you expect them to perform perfectly the first time? That's number one. Number two, if you do have experience and you're still struggling with this and you've been through that 4, 5, 6 times, honestly, the answer is going to be, and this might sound really harsh, but grow a pair, right? If your plan is, I'm going to enter here, my invalidation is only, X% away. Like, let me show you a position that I'm in. And this will be one, like SUI looks like absolute crap. But there's potential here for something in my system called like a gap fill that I learned from Pierre Crypto, right?
I think you're still looking at my screen.
Oh yeah. Okay. All right. Perfect. Thanks for calling that out.
Yeah.
But like, here's like a gap fill, right? So for example, this is like, your SR level, right? A deviation underneath and a reclaim. And not only are you reclaiming that SR, you're also attempting to reclaim the H4 100, 200, right? And the logical target would be to clean up inefficient price action on the downside, create a new higher high. Because if you're reversing a trend, you're looking for a higher high. So where's the target? Super high, super high. Where's your invalidation? Closing right here. By the time this position gets into this location, you're going to get that feeling of like, oh, I'm up in profit. This is a higher high. This could be a local high. I could round trip some of these gains. I could come back down this whole trade. So what I would say to simplify that is kind of just grow a pair. Like, you know what your target is. You know what your invalidation is. Why are you micromanaging your position? Because us as traders, like, the worst thing we do, and I do still, and everyone does, and it doesn't matter how experienced you are, you're still going to come through this, is just self-sabotage. You're going to get in your own way. You have a plan, A, B, C. This is where I'm wrong. This is where I'm right. This is where I think could occur. Unless something drastically changes in the market, you have to stick with your plan, right? So that's kind of what I would say. Like, the emotional guy, that if price gets up to here and you're up in a lot of profits and you're feeling that great, all I think you're going to do is kick yourself in the butt when it gets to the logical target that you're looking that you're hoping for. So two ways I would answer that.
All right, I'm feeling attacked. Just like everyone that's watching, I'm also feeling attacked. Don't worry. And he also was speaking to me when he said grow a pair. So
no, but that's me too. Like, yeah, these are things that I write in my journal to myself whenever I make a mistake. Like, the only way I grow is like I attack myself, and I'm like, Doc, you said you weren't going to do this, and you did it again. You said you weren't going to do this, and you did it again. But then I try to take the glass half full approach, and I'm like, did you at least do better than the last time you made this? Did you make any improvement over the last time? Because that's really the goal you're looking for. There's no 0 to 100. You're not going to just snap your fingers and, oh, Doc said it on a stream with Mercury, and we've magically just improved. I don't think that's how it works either.
Right. Now I'm Marcus Aurelius himself, and I have just, the stoic mindset. I can hold gains through hundreds of percentages unrealized before taking profit. Yeah. I like to think about it in the sense that there is no right or wrong. There's always just pros and cons. So if you're going to be the person who waits out the much higher prices, obviously the pros are, by the time that price gets there, if it gets there, you have drastically much more profit to realize by the time that it gets there. And if you're going to be a little bit more emotional about it, and maybe put more weight on lower time frame resistances, or maybe just say, there's no resistance here, we're trading in white space, but we just closed 20% higher than my entry, and that was last 4-hour candlestick. Like, I just need to take some profit here. There's pros and cons, right? You negate the idea of a full round trip of those profits being realized because you're playing into your emotions and kind of just using that as a basis to judge taking profit from. But of course, the con there is going to be, if we continue running, you potentially knock over what I like to call a domino effect of bad decisions, where by the time that we get somewhere higher, maybe you only have 20% of the position left running. Maybe it smacks through your resistance and just keeps going. At that point, you have no exposure at all whatsoever. And then suddenly, because you have no exposure or whatever it may be, you start to take action in a different manner than had you not knocked over that domino way long ago, taking emotional profit, 6 or 7 actions ago. And then it really is. So I like to think about it in that manner. And I'm like, how is this one thing, this one action going to affect me later down the line if this scenario occurs and if this scenario occurs? So like a great example of this is the recent breakout on Bitcoin. We were trading in a 7-month-long range, and now suddenly we're not, right? So we broke out. How many people expected us to break out? And it's like, I mean, that number is probably, minimal, but at the end of the day, a 50-50 range, it has to break out eventually. So, and with the intra range momentum, you knew that there was always the possibility of us breaking out. How did you play into that, though? What were the pros and cons at the time of the range? Because I don't like to put so much merit on outcomes themselves, because that would be to judge everything that we do based on variance, right? And then everything that you do would be based on variance. And then you would just kind of be led blindly. I would much more so put merit on a particular system, a mindset that has me able to acknowledge something like an eventual breakout and crazy expansion and an immediate, 15% candlestick higher than the 7 month long range high. But at the same time, I understand that if the range continues ranging the same way that it has the past 7 months, then I'm not, totally in ruin. And, I never saw this coming. I'm going to totally retrace all my profits and give it all back to the market. So that's the way that I like to go about it. But for the most part, you have the same kind of gist of an answer as I do.
Oh, my bad. I actually muted the mic for a second. Sorry. Yeah, no, I think you nailed it better than I could. You speak so eloquently and like thought out, and I don't think I'd say that better than you. But yes, I 100% agree with everything you said. I could like mirror everything you said there.
I appreciate it. All right, man. Well, what else is affecting you right now? Psychologically, let's get deep. Psychology.
Sure.
That's why I thrive.
For sure.
What are the thoughts that are going through your head right now? Maybe just pertaining to a high time frame outlook in the market.
Okay.
We can be speculative here. We can,
Yeah, sure.
I rarely ever am actually speculative in giving my arbitrary thoughts, because that's not what I'm ever going to actually trade. So it's very rare that I ever do that in these YouTube videos, but I'm more than willing to just bounce, chat some shit with you, and we can talk, hypotheticals and theories and speculation and whatever. What are your thoughts on the market?
For sure. So, the way that I've been navigating the market is through this one chart. I try to keep it as simple as possible. I don't want noise. I don't want news. I don't want anything. I don't want macro. I just want to look at this, right?
I can't see your screen.
Oh my God. You're on point, man. You're on point. I love it. Because you know what? I'm just switching to the trading view tab, and then I'm forgetting to look at our StreamYard tab. But yeah, so anyways, the Bitcoin weekly chart is really where, I've built my position all year. And just to simplify, I know a lot of people that follow me hear me say this a million times, and they're probably sick of me saying it. But basically, the way I see it, you had a comp, you had a swing high, you had a weekly close through it. You had a comp, you had a swing high, you had a weekly close through it. Same thing. You had a composition up here, you had a swing high, a weekly that did not close through it, with the strongest narrative that we had this year. This was not a narrative fueled rally. This was simply yearly open, a lot of doubt, a lot of skepticism. Is it a deviation? Is it a reclaim? Is it this? Is it a bearish back test? Did we break structure? Did we not break structure? Right. And it wasn't until like that alt season where everyone, had fun, that they're like, okay, yeah, this is great. Again, fear. This was a great narrative. USDC, USDC depegging and repegging, and the whole, Bitcoin is a flight to safety. Banks, I think is SVB that blew up, and Bitcoin is safe. Banks are corrupt. Like, that was a narrative. It was a legitimate narrative, and it fueled us. And third, we had the BlackRock ETF filing, which without a doubt is the strongest narrative of the entire year. Of, BlackRock never gets denied, and they're always successful, and Larry Fink has changed his tune on Bitcoin, and he's the biggest asset manager in the world. So great narrative, but all we did was weekly SFP into supply, week after week after week. And I was kind of just mocking bulls here, because people who were bearish the entire year, they failed to see what formed right here. They failed to see that like momentum has like completely subsided into the level that everyone knows. Everyone's familiar with 30K. Whether you draw this at 28, 29, 30, 31, it doesn't matter, right? We're just taking a broad idea here. And you kind of got absorbed. The news kind of got absorbed, and we broke down. So my leading thesis going into literally like 10 days ago was that we're going to do the same thing. We're building a comp. That's that swing high. We're going to SFP that high, and we're going to break down. And until like that fake news pump, and oh my God, I'm going to just go here, right? This looked like the same thing. Like, I could have just drawn this red, and it's, that's what I thought. I was like, okay, I'm bearish. We're going to come to lower prices. And that was my framework. I had to adjust kind of on a dime, right? And I can just fast forward through this part here, but like the weekly close or the move that we had off the fake news, where the fake news started getting absorbed, and I know you use EMAs in your system. I also use EMAs. So we're going to come to the hourly here. Not there. Where is it? This one. These are old notes that are no longer relevant, but When we did not fail to break down here, that's when I switched my tune and I was like, okay, something's different here. Something's different, right? I need to pay attention. I need to lock in. And this was at 28K. And I think for a lot of people, and myself included early on, it's very hard to mentally get over the hump of, I wasn't bullish at 25K or 26K or 27K, but now I have to be bullish at 28.2K. And I have to have plans in place for like, I'm wrong. I think what people do correctly is they'll be like, I want a long XYZ up here. If it gets to here, I'm wrong. But then when it gets to there, they're unwilling to accept that they're wrong and they're unwilling to change their plans. And they just kind of go, well, whatever, right? Oh, well, whatever, right? I'm not going to do anything about this actionably because they don't make plans, right? So that's what I did here. I was like, okay, this is different. Bitcoin shouldn't just continue to be holding this trend. We should have broken down. And now what you look at was a high time frame close over that level, right, that we had last week. And to me, that was like, that's game on. That was a change in structure of the market. That was a change in character. That was a new like fueled bullishness that came kind of out of nowhere. And I think a lot of people before this weekly open were still skeptical. They're still like, oh, this is a lower high. This is whatever. This is 30K still resistance. And simply to me, just the framework that I built for myself this year using the weeklies was like, no, this time's different. Like it's full steam ahead. I don't care what anyone says. We're going for it. And I said on a stream on Sunday, I was like, maybe we, and I felt like guilty for being bullish, which is so weird how the market will do that to you, to be like, you're not allowed to be bullish. But I was like, we're probably going to 37. Like, why are we up here again? If we're bearish, we should not be up here. But we're up here and we're breaking structure locally and the daily and everything. Yeah. So to me, this looks like you had an opportunity to be bearish. You had an opportunity to break down and you didn't do that. And this, in retrospect, was a bull trap, right? Like you trapped, or what is it? Bear trap?
Bear trap. Yeah.
Yeah. Bear trap. Right. And you trapped a bunch of bears down here thinking, myself included, like, oh, this is going to go a leg lower. And here we are up here. And all I have to do now is entertain the idea that a trending market is going to continue trending.
Boom.
That's the end of story. Like I can't be like, okay, well, this is topped at 36 now. This is topped at 37 now. It's topped at 38 now. It's like, no, this structurally is just an uptrend. And I have to keep treating it as such. And that's where I am right now. I don't think enough time has passed because I've been trading intradays. I've been trading rotations. I've been trading altcoins for me to actually make high time frame plans from here. This is a whole new set of information that we didn't have the prior like 9 months or whatever. So I think I'm going to need time before I actually have concrete plans of where this can go. But I'm willing to entertain higher prices. I'm willing to entertain 40, 50. It doesn't matter to me. It's just, this is where we are now. This is where we are now. And I think it would be like dumb to just be like, to start making concrete, like this is going to happen once again, plans. It's like, let it have some air to breathe.
I think you said that beautifully. It's almost as though you like downloaded my thoughts and then like read them out loud.
This is why we get
along. But yeah, everything that you said about the bear trap, how we had every reason to break down below that level. Like that was a pending lower low in the making on, like in terms of closures and just continuation of downtrend. And I mean, bears had 2.5 months of, hey, we're stalling at 26K, like do something about it. Right. And they're never able to do anything about it. I think the fake ETF, it's so hard for me to wrap my head around it, not because I can't fathom the idea of this market going up, but I'm interested in markets are really like a social experiment. And this is the most intriguing social experiment that I've ever been able to witness, because for quite some time now, we've known with 90% confidence that a Bitcoin spot ETF is going to be approved sometime before January. Right? We have known that. And this is coming from experts who know more than you and I, Doc, and anyone else watching this. So 90% certainty that a Bitcoin spot ETF gets approved sometime before January. And then everyone and their grandmother knows that when that news comes out, we get green candlesticks. I don't care if you think that, hey, we're going to sell the news and retrace and whatever. Not a single person in their right mind believes that the minute that news hits the market, we get -5% red candle, right? No one thinks that. So when the fake spot ETF news hit, And then everyone's like, oh, now we know what happens. No, we don't, because you should have expected, as soon as the news hits, you get a green candle. Then what happens after that? Do we retrace that candlestick in the next few days or weeks or whatever? Or does that kickstart something much greater in terms of bullishness? And then that is still unknown to us, right? Because we haven't actually gotten that news yet. But what happened is so weird, because a fake spot ETF hit the market, and then the market rallied, as anyone in their right mind who has any degree of market experience would think that it would. And then from there, it fully retraced the rally simply because it was fake. And then after being fake, it continued grinding higher. We spent all of like 48 to 72 hours trading right below 28.5K, which at that time, or not at the time, but which was a key supply zone on my chart. And I've had that I've had that resistance level drawn for months now, right? Because we've been in a 7-month long range. So it's like, wait, this is weird. Fake spot ETF, but yet it sparked FOMO in people. How is it that these crypto natives that have 90% certainty or confidence in a 100% green candlestick initial reaction are feeling FOMO because of something that was fake? It's like, oh wait, there actually might be something to this. It's cool to speculate, oh, it's going to be a crazy wick on the chart, and that was a top, and then we're going to continue going lower until eventually the real news hits, and then maybe that'll save us. But when you go 24 hours, 48 hours, nearly 72 hours, and price still has not made a lower low, it's like, wait, what's going on here? Are we actually going to get the breakout? You have to start mentally preparing for the breakout. Even if you can't, like Doc said, grab yourself by the balls and start bidding, and you can't justify taking on that kind of a position, which again, per my perception of risk reward, and even though I make most of my money through swing trading spot positions on BTC, I could not justify adding additional exposure to my ledger account from my trading portfolio anywhere in that range. Thankfully, when the fake spot ETF news hit, I was already positioned in high time frame outperforming altcoins. So that rally did benefit me, and a lot of those coins continue to trend upwards. Like you said, now we just have to lay down our arms and just say, hey, this is an uptrend. Let it continue trending until it breaks, and then we see what happens thereafter, right? Don't be the dude who's trying to call tops and predict what happens next. Just let it roll. And this is exactly why we're here. Just let things play out, and the market to kind of take over the heavy lifting and just kind of reward us with exponential kinds of gains and in a relatively short period of time. So yeah, I think you said it absolutely beautifully. It's very much, this is the most interested that I've been in the market, not just because of it's bullish and it's uptrending. I think it's an amazing social experiment right now. I feel like I'm witnessing like social experiment history. You can tell I'm very much a nerd. I'm a chartist nerd.
You know what's crazy is like, I think DGen Spartan tweeted this, and it was the greatest tweet I've seen, where he described TradFi versus crypto in this image. He drew it much better than me, but he drew it like this. He's like, TradFi just goes up forever. It has a nuke, and then it goes up forever, and then it has a nuke, and then it goes up forever. And he's like, crypto goes up for like a small amount of time, and then goes down literally forever, and goes up for a small amount. I drew this horribly to represent what I'm trying to say, but it'll go down forever, and then it'll have a quick spike up. And we're all here for that quick spike up. Yep. But the amount of time you have to endure where it's not like that conditions your brain to just continue expecting this, conditions your brain to continue expecting this. And if you're the guy that's not able to quickly pivot or expect or change with new information, and you're just going to keep hammering, like, you're going to keep salivating at bells, as that saying goes, I don't think you're going to make it in crypto. You have to be able to be like, okay, I'm wrong. I wasn't bullish at 24, 25, 26, but I'm getting new information here. And get over yourself where you're like, I missed that. Whatever. Am I just going to miss the rest of it now? Am I going to miss forever? And I think everyone has this feeling they have to get over. Myself, we've all experienced this, where it's like, I don't want to feel like an idiot buying the top. But again, who are you competing against? Like we've socialized this in a way. We have CT, we're talking here on YouTube. Like we've socialized this where everyone feels like it's like this competitive game. We're competing against one and shamed publicly. But at the end of the day, you're just trying to make money for yourself, right? And if you're too scared to take action, to like fail and then learn from it, and you're just going to say, no, I'm not going to take this position here because I'm buying the top. Well, it may be a top, but you know what happens when you're wrong? You learn from it. Like you don't learn from being right. You only learn from your mistakes. So it's like you have to have an option in place to like play into whenever this comes. And I think another contextual clue is like we've had 2022, we've had 2023 pretty much. 2024 is a halving year. If you're not at least neutral, bullish, or optimistic to be like it could happen, this could be it, whatever, like you should be ready to jump on that horse at any moment, you know, not just like, oh, I never got my 12K fills, I never got my 16K fills, I was bearish. Like just make a new plan. You know, it's okay to like you messed up, who cares, dude? Like this market goes on forever, like forever. It's just gonna keep going. Like don't think about the last 6 months.
I talk about this psychologically all the time. I always say how I used to fear missing out on the bottom or being bullish at the top or whatever. And it come to find out over time and through experience and through kind of just like self-reflection of my own emotions and everything, I was able to kind of figure out that I was never actually fearful of missing out on the bottom. I was never actually fearful of being bullish at the top. I was fearful that if I wasn't bullish at the exact Pico bottom and I didn't have a position already pre-established, by the time that we go and break out and start to create higher highs and shift trend bullishly and so on and so forth, I wouldn't have the balls to go in position into that kind of a trend. And like you said, it doesn't make any sense because we're literally here for exponential kinds of rallies and crazy kinds of gains in relatively short periods of time. And I see this argument come up all the time. And I want to, you kind of just like made me, you reminded me of it. I want to touch on it a little bit. It's a coping argument because when we were trading at 26K back in June, 6 months have gone by. At that point, BTC has then rallied, from year to day to yearly high 100%. When it's trading at 25K, it's still up 60% off the yearly, from year to day. Yet I come in and I see people saying these like crazy arguments of which market's more brutal, this current market or 2019. And it's like, dude, we're up 60%, 60% in 6 months. How exactly is that brutal? And then people say, oh, because everyone missed out on the rally, Mercury, because 10 days out of the year have accounted for 90% of the appreciation in Bitcoin price so far this year. It's like, dude, that's the history of Bitcoin ever. And that's also just markets in a normal state. This is always the case. And then people say, oh yeah, if you go look at TradFi, you go look at, SPX or whatever, it just goes up only to the top right corner. SPY or SPX or whatever has been in an uptrend for the past 13 years in a row. If you go back and look, 5 to 6 of those years are just simply consolidation. They're just sideways. So like, what does that tell you? The norm in markets is sideways. And then a relatively short period of time actually accounts for a large majority of the appreciation and value of that market. So like that whole period, that you're looking at from 2018 or so into 2019, that's just 1 year of sideways. What is it? 1.5, 2 years of just sideways, essentially. Yeah, 2 years.
Yeah, 2 years, yeah.
So it's like, it doesn't really, and then again, back in the June lows, that's 8 months of sideways again. And then you have this spark of a rally. Now, obviously, all of 2020 and 2021, those are going to be our bull market periods. So you're going to see drastically, exaggerated kinds of trends for that length of time. But this is the norm in markets. I want to say it's a JP Morgan article. It might be Forbes. I'm not exactly sure. But there's an article that goes back and it did this exact same calculation back into the 1980s for the stock market or the S&P 500. And it came to the exact same conclusion that roughly 2 weeks out of the year account for a whopping majority of the appreciation in value in that market. And so people like love to cope with these arguments, but it is cope. It's that is the norm. You better get used to it. You better get used to missing out on rallies. You better get used to getting lulled into complacency for sideways, over the course of 3 months in a 5% range, and then the next 10% daily candlestick just coming out of nowhere for literally no reason at all. Fake news, right? You better get used to that, or else you're going to have a terrible time trying to adapt. And if you are a trader, that's literally what you rely on, is your ability to adapt. You're not an investor. You're not relying on the market. You rely on yourself to be able to adapt to the market. So if you're going to sit there and make those coping arguments, you are going to have a really tough time. Is your mic muted again?
There it is. Yep, it's muted again. I try to decrease the background noise, and I'm
It's all
almost
good.
concerned there's an echo because my monitor's right next to my mic, and I'm like, okay, when he's speaking, I hope there's no like reverb, so I do mute it.
Yeah, you're good.
But yeah, man, I like I said, yeah, I agree with everything you said there. One thing I wanted to point out, because you asked me earlier, and this is actually something I thought about last night. I'm actually deliriously low on sleep. The last 3 days combined, the last 72 hours combined, I've slept 10 hours. It was 2, 4, and 4 the last 3 days. So like I'm really behind. So I forgot until we just started talking about this that I was looking at this last night. And what chart is it on? Because I was just kind of like brainstorming. It's like, okay, well, where can we go? What can we do? Let's look at prior cycles. Let's concoct a narrative, right? Let's game theory. Let's make something up. So I was looking at this. The yearly VWAPs, right? And if people that aren't familiar with VWAPs, it's kind of like the same idea as like auction market theory or, volume profile, where 90% of, price has done this, and this is one standard deviation away, and that's another standard deviation away, right? But this is like the agreed upon average price. That's what VWAPs are. And this is just a yearly VWAPs. And I thought it was interesting that the bear market in 2018, right? That high, that value area high of that bear market.
Let me cut you off a little bit. Scroll a little bit lower so that we can actually see, because the voice thingies are covering that part of your
let's get
screen.
rid of that for a minute.
All right, cool.
Yeah, so the 2018 like value area high, or the one standard deviation band away, more or less capped price for a couple years, right? You had your highs, you had your lows, but it was more or less range bound. And then you had your bull market. Who's to say we don't do the same thing this time? I mean, why not, right? If we're just theory crafting, if we're just tinfoil hatting, what if we do this, right? And we come back in here and we do that, and then we do this, and we just crab in here, and then that's our bull market whenever it does happen. I know it's not drawn to scale. I'm not saying 2026, but what if that's the case, right? That could be something we could look into. I don't know if anyone's talking about that, but the more and more I've been messing with VWAPs in my own trading strategy, the more I like keep these on. And this is just something I noticed. I was like, that could be an interesting case, because it would make sense, more or less, right?
I like it. We get to speculate. I don't ever really get to do this with anybody. Just kind of chat shit and talk like, hey, hypotheticals, theories, like what if this happens? Personally, my arbitrary thoughts, of which that I do not trade, I always trade my system. But my arbitrary thoughts are that the way that this has now played out, it seems as though everyone is kind of pending that impending doom and the macro side of things to like kick in, and for lack of a better expression, reality to kick in. And for us to go into a recession, and therefore risk assets sell off, incredibly. And then at the same time, trying to gear up for, a 4-year cycle bull market, election year, having whatever. So it's weird the way that it's played out. And I think that because of recent price action and the way that we are rallying outside of a 7-month long range, and kind of in anticipation of greater things, maybe trying to gear up for 2024, or maybe trying to gear up for, a spot ETF approval or whatever it may be. I think that actually does kind of set the stage for a kind of, smack in the face for the market as a whole before something like that does actually go on to happen. So I don't know if it's going to be, a recession.
One of your theories early this year was that we would go to a price that was uncomfortable for both bulls and bears, right?
Yeah,
if I remember
absolutely.
correctly.
Yeah, and I
Yeah.
said 38 to 42K, somewhere in that region. That would be a good target for this year before things kind of take over and get uncomfy, and then we get something similar to 2020. Again, I'm not going to sit here and be the person who tries to call for black swans
Mhm.
once every year, right? Because they are, if it's truly a black swan, it's not supposed to happen until once every century. And unfortunately for us, they've been happening once every decade, once every 2 decades. So I'm not going to sit here and say that, oh, we have to see March of 2020 again. I don't know that. Listen, I don't know if my theory or what, my stupid little arbitrary thoughts, maybe by the time that a recession kicks in or the market says, oh shit, remember that macro stuff that's lagging and those, tailwinds that are, impending doom. Yeah, that caught up now. Maybe that causes a drop from 60K into 40K, right? Like
Yeah.
who knows, right?
Yeah. Yeah.
So it's always going to be trade the chart and just trade what's on the chart and not what you want it to be and not what you think it might be. It's always just going to be trade the chart because, man, I swear, if you go look at SPX along 200 weekly moving averages or SPY along
Yeah.
200 weekly moving averages, literally for the past 13 years in history, every single person who has ever had an argument as to why this market will not continue higher has been wrong. That has been the case for 13 years. So, of course, that invites the counter argument that, well, it's been 13 years. It's about time for it to come crashing down. But how do you know that it's not a 26-year long trend before it does come crashing down, right? If you just purely pay attention to the chart itself, it's impossible for you to have gotten caught off guard. Now, granted, in 2008, when we go on and reclaim that trend and kickstart a 13-year long bull market kind of thing, I am, still playing with crayons. But,
Yeah.
but I mean, that's the reality of it, man. You kind of just gotta, lay down your
How
arms
clean does
and
it look when you
stop
just
thinking
throw in
so
some
hard.
EMAs?
Huh?
I said, how clean does it look when you just throw in some EMAs? You just feel so silly. You're like, oh, you know what? It was just going to do this anyways. We're just going to correct in there. We're going to continue our fucking bull market forever anyways.
Right. It's like, dude,
And
I'm
all this
really
fear,
I'm
like,
really
oh,
out here getting out traded by moving averages. It's pathetic.
yeah. One of my favorite quotes from last year was XO saying that. He's like, you all got out traded by some boomer EMAs. And he was referring to like the 1221 on like a downtrend in 2022. I was like, that's hilarious.
Yeah,
And I keep saying
granted,
that in my head nowadays whenever I look at charts and I'm like, everyone's getting out traded by some boomer EMAs.
yeah, absolutely, man. Because again, when those EMA or when price action starts to go into price discovery and just goes grind up only and no pullbacks allowed, those EMAs are always going to be bullish the entire way through because they just follow that price. Whereas, you and I are going to be trying to grab ourselves by the balls and refrain from taking too much profit too early and whatnot. And, acknowledging every single RSI bear div and sweep of the highs and ugly 4-hour candlestick and so on and so forth. But yeah. Another thing that I wanted to touch on is, what are your thoughts on a spot ETF? Because we're speculating, right? Because this is not going to be exactly what we trade. We're always going to trade the chart. Let's just chat some shit. What are your thoughts on the spot ETF now as it stands? And really quick, let me give you my thoughts. Prior to the whole fake spot ETF news and us trading at 35K for all of like 2 minutes, and then, currently, consolidating around 34. Prior to all of that, I was taking comfort in the downtrend that Bitcoin was in because I not knew, right? I never know what the market is doing, but I had a very strong conviction in the idea that if a spot ETF gets approved and we're downtrending, it kind of negates the possibility for it to be a sell the news event. So I was more along the lines of, hey, if this comes out, it is 100% going to be bullish. There's no doubt in my mind. I can just, kind of take a very 70 IQ route, buy the news, and then let, the market do the rest for me and let the trend play out and break out of ranges, higher highs, whatever. Whether that happens at 25K, 20K, 16K, I don't care. But as long as we're downtrending and that news comes out, I don't really foresee that being a sell the news event. Well, the issue is we're not downtrending anymore. So now it begs the question, what do you think happens from here?
I just want to preface this and say that I have no edge in trading news. I try to remove it from my system like purposely, and that's because of two main reasons. I know you'll remember these days, but when Russia invaded Ukraine, that was like this wick right here, right?
Oh
And
yeah.
I thought, and at this time I had a setup, right? And I wanted to long, and and I woke up and all my bids got filled, and I was super stoked. And price was hovering around my entry, and then I saw the news, and then I was like, oh, this happened, and that's uncertainty. And guess what happened afterwards? The next week, Bitcoin ripped up 10%, right? So it had no impact. And then the second time this really came to my mind was last year on the June lows, and I don't remember which candle it was. It's like one of these. Inflation came in at a historic 9.2% or something. And it turned out to be a buy the news event. And we just completely reversed because it was the worst inflation in history. It exceeded expectations. It blew out. It was over estimates. And guess what? We went up. So I realized that I don't have an edge playing these things. So I'm going to ignore them completely and just stick with charts. So that I just want to preface that. So
I echo you
my
in that,
opinion,
by the way.
yeah, my opinion does not matter. Do not take what I say now for anything. But I would speculate that, like you said, since we're uptrending, whenever the day gets announced that we're approved, the day we're approved, we should have a crazy candle. It's official. The grayscale news has happened. Whatever happens, and that's a blow off top. That's a blow off top. And then we put in a lower high, and then maybe we distribute, and maybe ETH does something, and alts do something, and we form a bracket, and then we break down, and then we probably start rallying on the halving. Right. But it's still healthy, right? Maybe we break down, maybe we test under here, right? We come back to 25. Who knows? Who knows how high this goes? Who knows how low this goes? But that's kind of the schematic that I'm thinking about. Overall, like if BlackRock gets approved and there's an actual spot ETF, and now people are supposed to allocate to Bitcoin, 0.5% of their net worth or savings or IRA is going into spot Bitcoin. I mean, thank God, like if we picked the right place to be, I guess. Like, I mean, good for us, right? So it should be long-term bullish. Those are in a nutshell my thoughts, like on the ETF. And I have this guy in my Discord, Shay Trader, who talked about the similarities between like gold and prior Bitcoin ETF filings and a bunch of stuff like that. So he has a very put together thesis on, well, Bitcoin should continue rallying into the ETF approval. And even after it gets approved, historically speaking, this is his data, not mine, that it should continue upwards. Like this is the approval, right? And it should continue upwards. And this is the day that it gets launched, right? The launch day of the ETF, and then it goes down, right? So that's his thought on it, which I think is another plausible idea because he was using prior ETFs, not spot, but futures and stuff like that in speculation markets, not only Bitcoin. I think he's using a lot of speculative markets to say that this is a common theme of like sell the news on the event, continue upwards, product actually launches, then you go down, and then whatever, new trend forms. So there's two ways that I'm kind of mentally preparing for it. I think the strongest conviction I have is that the day it gets announced, you'll get a pump. I don't think the day it gets announced, we're going down. I think the day it gets announced, you go up. That's the only kind of conviction I have at this moment.
Yeah, I would agree. And that does seem like a very plausible outcome. That's very interesting. So thank you for sharing that. And shout out to that guy in your Discord. So
Shay Trader, shout out to you.
Yeah. I kind of have the same belief. And I want to echo you very quickly. And I also do not have any edge trading news events. Quite often I am totally useless, and I kind of just refrain from making any kind of drastic decision based off of them. When I'm saying, hey, the spot ETF gets approved, it would be kind of it would negate the idea of a sell the news event if we're downtrending. That was really more of like, it's a comfort thing, because if we then go on to reclaim 4-hour 200s or crack daily market structure bullishly or whatever it may be, I can then, from a deeper sense of conviction, justify that position. If I can justify that position, I can manage it better, and so on and so forth. But yeah, I totally have no edge in trading news events or catalysts or anything along those lines. So I echo you in that regard. But yeah, that was really interesting though. And the historic kind of way that previous ETFs have shaped out is definitely interesting. I should go back and do some research on that as well.
Yeah, Sometimes when people say these things, I'm like, am I just the most chart monkey, low IQ idiot out there that I don't pay attention to any of this stuff?
Yeah,
Or am I
man.
actually smart for tuning it out? And I don't know. I
No,
say whatever makes me feel better
I
in the moment.
I feel the exact same way. No, I really am. Like the chart tells me my news. Like at this point, right? If we're in an uptrend, you could tell me it's because of the spot ETF, because of the halving, or you could say that there's a koala stuck in the tree somewhere in Australia, and for whatever reason, that's really, really bullish. And I agree, right? Because like you said, we just kind of have to lay down our arms and let the uptrend continue uptrending. That is a
Yep.
nasty swing failure
Rejection.
pattern.
Yeah,
Yeah.
that's a rejection. I aped into calls this morning, like absolutely aped off the market open. And I was up 300% on the calls after like 30 minutes. And I was like, I need to cover the entry. So I sold 30% of the calls to cover the entire position. And I'm sure they're down now. I'm sure they're
And
now
it's all
down.
because we recorded a video and you weren't able to manage the position, and that's why.
No.
So
No, but
I'll
I mean,
send
it's
you a
fine.
refund after the stream.
It'll be a break even trade. I was concerned just because I pulled up this chart. I was concerned about the gap. I was like, man, we opened with such a gap up. Like we're not going to be able to trend upwards without closing this gap, because that's what happens in the stock market. Like anytime you leave these gaps, the markets want to go fill it in, and then it might go up. So we'll see what happens when coin gets back down here.
Yeah. From a very basic general standpoint, and I want to wrap this up here. I don't want to take up too much more of your time, but from a very basic standpoint, like fundamentally, are you interested in a sort of like leveraged kind of position as opposed to just taking on Bitcoin exposure? And what I mean by that is finding other avenues for what would be higher beta. So like Bitcoin miner stocks, or like coin, for example. Is that anything that catches your interest, or something that you are, looking to accumulate, or anything along those lines? Or is it more so you're just comfortable with trading Bitcoin itself? Your mic is still muted.
Boom. Thank you. I actually had a lot of kind of stock derivative exposure to Bitcoin last cycle. I came from the stock market before crypto. So a lot of the exposure that I got to crypto last cycle came through miners, and came through Mara and Riot and Hut and Bitfarms and all these other miners, right? So I remember trading these and holding, spot positions in them, as well as like long-term dated calls, leaps and stuff like that. And through that experience of doing it last cycle, I recognize that the best opportunity for this is to let Bitcoin enter a bull market, be in a position of strength, and then just buy calls, buy options, buy calls on miners. Whether you want to do that now with super long dated calls, maybe I haven't checked the chain. Maybe they're cheap or something like that. But that's one way that I think you can get exposure to that. Secondly, the only other one that I like is Coinbase, just because I think that's like the low IQ, easy bet on like, well, if you want to just bet on the success of volumes being high in crypto and Bitcoin doing well. Also, I think Coinbase is custodying all the ETFs, right? They're all going through Coinbase. So that, that's pretty good. And I think this chart looks really nice, to be honest. It was down only. It's never had a bull market. It was born in a bull market, right? So you have the classic like accumulation. When you get out of this, you should have a nice rally. I don't know how high it's going to go. I don't know how irrational it's going to be. But what we've seen this year is Coinbase did outperform. I don't know if that's still true, but it did outperform Bitcoin for a little bit of the year. Actually, what am I doing? Yearly open was all the way down here. So that's kind of like a nitpicky place, but actually no, that's not nitpicky, because Bitcoin was at the lows on the yearly open too.
Yeah.
But yeah, it did really well. So this was an avenue for people who couldn't get Bitcoin to speculate on Coinbase. I wonder how much a spot ETF would change that. I wonder if like an ETF would be like, oh, well, why would we buy Coinbase if we could just buy, the Bitcoin ETF? That's something we have to think about when the time comes.
That's kind of where my brain is at too. Like, how is a spot ETF going to affect this? And from that perspective, I'm very much looking at it as like an ignorant, like 4-year-old that is in a candy shop. Like, this would be so cool. What is this going to be like? Right. I have no actual edge in that manner. But it definitely is something that I'm intrigued to kind of add to my experience tool belt to see how is the market going to react to this. Because the reality is I'm probably still going to be a trader 10, 15 years from now. But another thing that I found interesting, and I don't know, maybe you haven't you're not familiar with it, but there was a video that Kobe shared. It had something to do with, did you watch the video by any chance? He's tweeted it out like a month ago. Okay. So it's like an hour-long video. It's like a TED Talk kind of thing, or like a podcast. And it's about this guy who discusses his experience in tech and new innovative kind of things, and how when they get regulated, it's actually, you want to buy into the regulation, because what they're trying to do is kind of set up those few people that they're going to regulate on a pedestal, so, and be able to kind of set those people up so that they can regulate those people or those industries or those companies, and benefit them the most, and kind of monopolize the industry in a sense, and therefore kind of wipe away all of the people who were already in the industry prior to that, and not have nearly as much competition or nearly as much to kind of worry about. And so he was saying, he was going through a bunch of examples, and there he was saying like, hey, this has happened, and they were saying, please regulate me. And then they got regulated, and then they became, the biggest company for that specific innovative sector. And then kind of all their competition got blown out of the water, and all the funding and everything just went to this specific industry. And he was like, Pfizer is a good example of that. Moderna is a good example of that, whatever. But then he was saying, and he shows a quote of Brian Armstrong, and they're saying, please regulate us. So it's like, he's like, well, what do you know? Brian Armstrong did his research and history. He wants to be regulated as well. And if they get regulated, there tends to be a lot of fear along that regulation, but it's actually, you would want to buy into that, because they're going to prop up the industry and make that company or those companies the behemoth in that industry, and they're more likely to do incredibly well and become kind of like a blue chip in the future. So I found that very interesting, and when I watched that hour-long video, it made me very bullish on coin stock. So but again, it's all just kind of, all of this is above my head. I'm more so just like an intrigued market participant who loves to learn more and learn new things and new experiences. But yeah, I do find it very, very interesting. So maybe go give it a watch. Anyone who's watching this, and for you, Doc, I think you would enjoy it as well. Yeah,
definitely. I actually have a flight coming up tomorrow, so I could just watch it on the flight. Probably be a good time to do it.
Oh, cool, man. Well, safe travels, man. I don't want to take up too much more of your time. I appreciate you doing this with me. So
yeah, thanks for having me on.
Yeah, absolutely. So last time we did a video on Doc's channel, so go check that out. Anybody who hasn't seen that already. This time I told him, next time we do this, we got to do it on my channel. So I hope you guys enjoyed the video. And again, shout out to Doc. If you guys are not following him, he does have a free Discord, just like I do. The clinic, so go hang out in that Discord. I'm sure he can provide lots and lots of value to you. Very genuine guy, amazing trader, and is more than happy to help several people. I've had many people come to me from Doc and say, both of you guys are just incredibly generous in how much you share and how much value you bring to the table for free. So not to compare myself to him, but the guy's amazing. He really is. He's an incredible trader. So please, all props to Doc. If you're not following him on Twitter or subscribe to his YouTube channel or hanging out with him in Discord, I definitely think that you would benefit yourself to do so. So thanks again, Doc. Appreciate you, man.
Humbled, man. Wow. Nice word. Thank you so much for saying that. I don't even know what to say. Thank you. Humbled and blessed, I guess.
Yeah. All right, guys, we're going to go ahead and wrap it up here. So thank you so much. If you liked the video, like, comment, subscribe, and share this with your grandmother so that she can, know about markets and speculation and be told that she doesn't have the balls to hold trades through unrealized profit and whatnot. But yeah, thank you guys so much. Much love, and take it easy.